We are live. Alright, amazing. So let's go ahead and get started. We're going to try to make this brief, unlike the last couple of times. We'll try to make it brief, make sure that we're answering questions and all that stuff too. Let me just mute everybody here real quick.
Yeah, there you go.
Okay. Oh, there you go, perfect. Alright, so we're going to go through the fundamental analysis as always, and then we're going to go ahead and move on to the technical analysis, and then any questions that you guys have. I'll have the chat up here, and I think Steph knows you have the YouTube up, right? So
yeah, I actually just opened it up on my iPad, so we're
okay.
all set there. But
awesome.
Yeah, like you were saying, we're gonna get through this quick for you guys, like a quick,
Yep.
nice breakdown, fundamentals, technicals, answer some questions at the end if you guys have them, and it's just something quick that you guys can rely on before the week starts.
Absolutely. All right, awesome. So if you guys are just hopping on into the Zoom, all we ask is just try to mute yourself, and then you can unmute and ask questions in the end as well, so we'll allow time for that. All right, so let's start off with some macro fundamentals. Of course, you know, we have the entire news about oil, and last week we had Biden along with India. We had, you know, certain other countries as well coming out, South Korea, Japan. They're all opening up their emergency reserves, and they're putting out extra supply of oil, and that's kind of to combat the high prices, energy prices that we have been seeing for the past couple of months, right? And so they're opening up those reserves and they're putting out the supply to kind of combat that. The OPEC is the one, it's a cartel pretty much of all these oil producing countries that come together, and they make decisions based on the data that they have been getting about the demand, the global demand of oil, and whether or not they're going to be increasing the supply of oil. So they have been pressurized a lot by a lot of these other leaders that, hey, can you increase the supply of oil so then we can kind of combat the high prices that we have been seeing so far. And so OPEC kind of comes back and they're like, yeah, we understand what you're saying, but we're going to be looking at the data, and the data isn't showing us that the demand is ramping up just yet, but we do have plans of increasing supply by 400,000 barrels in January, right? But after Biden and a lot of these other leaders combined, they started releasing oil supply from their reserves. OPEC, you know, obviously pissed off, says that, okay, well, that kind of impacts our decision, right? We're going to re-evaluate our decision to increase oil production coming into January and the entire rest of the year. And so, of course, we're seeing the same fundamentals that we started to see last year around the same time. Going into holidays, now, of course, we have a new variant that's coming out. And so now what OPEC is doing is they're looking at all this new virus data that's coming out. They're looking at new cases. They're looking at the travel ban and everything like that. And they're saying that because of this new variant, it kind of concerns us that we may start to see more restrictions again, like we did last time. We might even see potential lockdowns for countries who are not able to get a handle on their country, their economy, or even the cases that are going to be going on in their country. And so what they're doing right now, you have this entire week of OPEC meetings that will be coming out. But what they did is they're moving two of their technical meetings to a later date. So the one that was supposed to be on Monday is actually happening on Wednesday. So if you're trading commodities, if you're trading USD CAD, you're trading US oil, these are some of the dates that you want to make sure that you're keeping in your mind before you're trading, before those sessions, or even during the sessions, right? So you want to make sure what's going on there. So on Wednesday, the meeting of the joint technical committee meeting has been moved to Wednesday, and then the one that they were supposed to meet on Tuesday is being moved to Thursday. And then there's additional meetings of OPEC, and the broader OPEC Plus meetings will go ahead as planned on Wednesday and Thursday. So make sure you guys are kind of watching out for OPEC news on Wednesday and Thursday for sure. Yep. And then let's see here. So same thing, pretty much kind of just summed it up right now, where they're still looking at COVID and how they might have to, has been gradually rolling back its output cuts and has agreed to increase the output by 400,000 barrels a day each month. But they're going to talk about that, and they're going to see how the virus kind of impacts the demand. So they're projecting the same exact thing, that the new virus will be impacting the demand going into next year, and seeing how that pretty much impacts the overall macro energy market that you have. So that's for this article here, and then we're going to continue on here. Traders unwind rate hike bets as new code fears spread. Same fundamentals, just different variations of it as last year, right? And so the Federal Reserve, what the investors are pretty much doing in the markets now is that they're trying to price in, and a lot of these central bank officials are also playing off the sentiment. So they haven't said, right off the bat that we're going to be increasing interest rates on, whatever date, but they're saying we're having discussions and potentially do it by that date. So they haven't given you a clear statement, but what they're doing instead is kind of just playing with the sentiment of the market so far. And so we know for sure now that the Federal Reserve is not going to be increasing their interest rates until next year or the year after, while briefly pricing out any more hikes until 2023. And then the UK Bank of England tried doing the same thing, where they're talking about increasing interest rates without even, talking about tapering or anything of that sort. And so when UK failed to do that, we had Governor Bailey coming out and saying like, hey, we're actually not going to be increasing interest rates, and we've never increased interest rates in December, like in decades. And so there is no question whatsoever that they're going to be increasing interest rates in December in their new meeting. Instead, they're expected to tighten the policy in February. So that doesn't mean that they're going to be increasing interest rates. This could also mean just tapering back and taking other measures to kind of contract the money supply that you have in the economy, and then kind of move your stance from a accommodative stance to more of contraction monetary policies. But again, that is all dependent, and you will continue to see this statement in their monetary policies, that the outlook of the economy is dependent on the path of the virus. So now you have a new variant coming out. Now you need to kind of see how is this going to be impacting the economy in general. And the UK and Israel, US, and we're going to see this more in the following article. But a lot of the countries now, they're also putting travel restrictions on countries from South Africa and any other countries in general that have high cases. So you're going to see the same exact thing that you saw last year around the same time of the year, where a lot of these countries, they're going to be curbing they're going to be putting more restrictions onto travel. They're going to be putting more restrictions on a lot of different countries that have high cases in efforts to control the cases in their own country.
A lot of fear in the market.
Absolutely. So you are seeing that fear exactly, and you will see those safe haven currencies and commodities gaining strength, but we'll get into that into the technical side. So US, Canada follow Europe on Africa travel ban. Pretty much the same thing, where the World Health Organization and European Center for Disease Prevention and Control, they're researching this new variant. They're trying to see, how deadly is it, how lethal is it, how fast can it spread, and all of that. And in response to that, we've seen US, UK, Israel, a lot of the European countries now, Hong Kong, and a lot of countries all across the world tightening their restriction travel from countries in Southern Africa. After the
keep seeing so many different thoughts on it right now. Like, some people are extreme with it, some people are saying it's really not that contagious,
right?
Which is a good thing, but like I said, they keep seeing multiple different
and so all of that is just playing off of the market sentiment, because there's no clear data that's showing you all of this, right? There's no clear statements being made by anyone. They're just saying, like, these are projections, this is what we think is happening. And so it's all of it is just playing off the market sentiment, and you see that happening from a technical perspective. And we have been seeing this for the last couple of weeks, regardless of all the fundamentals that we have been talking about, how all of them are starting to line up again, and all of them are starting to line up with the technical analysis as well. And now we're starting to see the volume kick in because of the fundamental support, right? The fundamentals are the drivers of the moves that we see in the market. And then finally, you have Brexit talks. So last year, you had them not being able to even come up with any sort of deal when it came to Brexit. And then finally, they were able to come up with a deal towards the end of the year. And so we have the same exact thing, same exact timeline. Now it's just post-Brexit. So the same exact, addiction that they're using here, that the gap between our positions is still significant, and we are ready to use Article 16. It was the same exact words that they were using last year when it came to Brexit, that our positions still have significant gaps, and we're ready to, move on without any sort of deal. But they ended up having a deal at the end, because obviously this is significant for both economies. So with Brexit, same thing, where they're continuing to talk. They have these negotiations going back and forth. They still have these gaps on their positions, mainly for fishing. And then the tensions on the two sides over Northern Ireland are kind of calm right now. There's a lot of mixed fundamentals that are coming out, where last week we saw France kind of strengthening their stance against the UK, and then we had some talks about like, hey, the UK and the EU, they're actually coming close to some sort of a deal on certain topics, but still a lot of mixed sentiments being put out into the market, and all of it is just playing with market sentiment. You are starting to see that fear, you are starting to see that market uncertainty, and so that's all we're seeing from the fundamental side, kind of supporting that, but you will continue to see the fundamentals and the sentiment related to the fundamentals being relayed onto the technical side. So still a lot of market fear. If it's not positive and you're kind of just saying like, we don't know yet, it's still market fear regardless.
Yep. Exactly. There's no like clear cut, this thing is turning around.
Absolutely. And they will end up having a deal by the end of the year, and we know that from their history. So just know that as you're looking at the markets.
Yep.
From economic data side, you have a pretty easy session that opened up today, right? You have a pretty easy session going into tomorrow as well. You have some GBP data coming out in the middle of London session. So if you do trade London session and you're trading any GBP pairs, this is what you want to be paying attention to. But tomorrow you do have, from just the data perspective, is quite easy, but you do have a lot of important people and a lot of important speeches. So you have the Bank of Japan governors speaking, and then you also have the ECB president speaking, you have the Bank of Canada's governor speaking, and you have Powell speaking. So you have pretty important speeches coming out. Do expect volatility in the market around that time, but when the data points are coming out, any of these, it's going to be quite an easy session. I don't really expect them to have much of an impact besides on any higher time frames besides the 15-minute, 30-minute time frame. Maybe on the hourly, but not really changing anything that's happening on the 4-hour or the daily. So if you're trading when these fundamentals are coming out, make sure you're kind of using multiple time frame confirmation, and you're also confirming with the 4-hour daily time frame, making sure they're in your direction prior to taking any trade opportunities, so you don't get caught up on the wrong side of the trade. So pretty easy, right, for the rest of the day, not much coming out. And then when it comes to GBP, USD, or JPY pairs, not so much. And then you have some pre-London session data coming out if you're trading any Euro pairs. So this is something that you want to be watching out for, because as soon as the London session opens up, you will see all of this kind of being priced in. And then after that, the next important data that you will see, all of this is just, again, fundamentals right there. But the next important news that you will see coming out is going to be during New York session, where Powell will be testifying in front of the Senate Banking Committee about the CARES Act. So obviously with the coronavirus and the new variant coming out, this is going to be extremely important. Expect some volume around this time, especially with consumer confidence. And then going into rest of the session, just data coming out, so not too much to worry about. And then on Wednesday, you have some Euro news coming out, so PMI data coming out during London session. And then going into New York session, remember it is NFP week, so there is non-farm employment change data coming out. This is what you want to start paying attention to. You have Bank of England's Governor Bailey speaking. You have Powell speaking again. So a ton of fundamentals in New York session on Wednesday. So you want to make sure that if you are looking for any trade opportunities, you're watching out for these fundamentals, and you're making sure that your risk management is pretty much on point if you're trading during that day.
Yep.
And then going into Thursday, you have the OPEC meeting, right? So we talked about Wednesday and Thursday being important days for OPEC. If you're trading any commodities or anything like that, you want to be paying attention to that. And then you have the Challenger job cuts, another thing you want to pay attention to that's going to prepare you for NFP and unemployment claims. After that, you have some FOMC members speaking. And then Friday is the big day where you have NFP coming out, you have ECB president speaking, you have the unemployment rate coming out, you have the services PMI coming out, and the Treasury currency report. So that is the week in a nutshell. So a ton of fundamentals that will be coming out. Do expect some volatility. After massive moves, there is a high probability of consolidation happening as the market continues to collect orders and then continue pushing in its direction. So now we're going to move on to the technical side with Stefanos.
Yeah, guys, we have a mover of a week. I mean, if you think about last week, we had 49 stats coming out for economics. You just got to share this screen sharing.
All right, go for it.
Thank you. Yeah, so this week we have 78 stats coming out. So, it's NFP week too. So it's going to be a mover with gold, especially if we get any kind of surprise numbers. They are expecting good numbers right now for employment. So we'll see what we end up getting. But when it comes to the pound over here, I'm actually just going to hide the video, give myself some more room. When it comes to the pound's going to be a light week, right? You have the if we have any changes to like services PMI this week for the pound, I think maybe you'll see a move. But other than that, the pound right now, like they said, like the Bank of England said, they're probably going to be maybe increasing interest rates or tapering by February. They're not going to be doing it next month in December. So the only thing that you got to really keep in mind is you got services PMI coming out. It's a big deal. And you also have Bailey coming out on Wednesday to talk about monetary policy. So we'll see if he says anything surprising, but just keep those things in mind. Let's see. Monthly. You guys can see my screen, right?
Yeah.
Perfect. So monthly, I just drew up our, skeleton, kind of a breakdown over here of the higher time frames. As you guys know, we've been in this multi-year downtrend. We're still holding support from the 2008 market crash. Ended up respecting that support with the Brexit tank over here. And then with COVID, we never broke those lows. We've been in this bullish trend ever since, right? So we finally reached 156 up here, right? After months of just bullish pressure, strength in the pound, recovery in Great Britain, coming all the way back up to 156. Also, Brexit had something to do with that as well, them finally getting over that. So that pushes all the way up to 156. And then we've been in this recovery or corrective phase, coming right back down to these candle body highs of 149 to hold support. And then market sentiment pushes all the way up to 158, right? Tapping into 158, 200 more specifically. And then after the month was over, we never closed above 156. We closed right at that level, ended up rejecting that level completely, and also correcting the entire move from the sentiment that the Bank of England was going to increase interest rates. If you take a look at the pound right now, we almost completely corrected that move, and we're still ranging in this range over here, and we may be coming back down to 149, 300. That's that level that I have marked off right there. So looking over here at the weekly, I'm just going to now specify these levels over here, 156. Draw this as a zone over here. There we go. Yeah, 156 over here, and then 149, 300 is that level that I see price maybe coming right back down into. Now, if you take a look at the previous weekly candles, a lot of them bearish, right? Besides this corrective phase over here, where we corrected the move, grabbed liquidity, and then continue right back down. This current weekly candle, or previous weekly candle, created a top wick, passed the low of these candles, and then continue right back down to kind of mirror this candle over here to the left. It also has a wick that could be filling over here. So is this candle already creating its top wick to flip bearish and continue right back down? If you take a look at the weekly, though, we are in this bullish trend, and we're now starting to approach that 50 EMA on the weekly over here. So maybe we're going to tap off of that. We don't know. We just got to trade what we see and not what we think. Moving over to, we also have this level over here that I want to point out on the daily. So you have price reacting to this level over here, right? For some reason, we stopped over here. We had this massive bearish move coming all the way down, and then we stopped in that level. If you take a look, we had a previous support over here as well, previous resistance, where price also reacted to. So that level is actually 151 flat. It's a psychological level. So we're just going to mark that off. And if you take a look to the left, you can see price reacting to that level. So we've been in this bearish trend ever since creating those yearly highs at 158, 200. We've just been in a perfect bearish trend. Lower lows, lower highs, right? Kind of consolidating over here in this whole range over here, before breaking it last week and creating this low down here right at this previous support over here. Clean candles to the left as well. So right now, could we be coming right back up to retest this level, or maybe consolidating in here? Like I said before, this is going to be a slower week for the pound. So don't expect too many huge moves unless Bailey comes out on Wednesday, saying that we're going to be increasing interest rates before February. Then you're going to see this hold support right over here, and we're going to continue right back up to retest these highs. But, I doubt he's going to say that. He needs to see more data for that to happen. Right? He needs to see, more inflation, more signs that, it's the economy's not looking too good before he starts doing that. So looking at the 4-hour, again, we ended up rejecting this level over here. You can see it clearly over here to the left. And we ended up holding some sort of a support right here. The price is holding. But we came right back up to retest. So are we coming up to this previous level over here, this previous support? Or are we going to hold this level right here? If you could see that right over here. Are we tapping into that level to kind of consolidate in here? We'll see. Looking at the 1 hour. Here we go. The 1 hour is actually retesting this previous support right here and holding a resistance. Here we go. We're holding some sort of a resistance over here. Do we have a clear sign that we're going to be continuing right back down? We could. I mean, it gets a little tricky up here on the 4 hour. We kind of gapped up today with the market open. But looking at the 1 hour, that does look clean. Looking at the 30-minute, this looks clean as well. And we're also holding that resistance to the 50 EMA as well. So could we be coming right back down to retest these lows over here? I could definitely see it. We just got to be careful because it is a Sunday and it's 8:30 coming around the corner. So I think we could possibly get a nice move coming right back down to these candle body, this candle body open over here and 151 flat. I could see us retesting that. This is where you go back and forth with multiple different time frames over here to see where price is reacting to. Let's get back to the 1 hour over here.
That, and you also want to wait for proper break and retest or whatever confirmation that you use for your entry, right?
Absolutely. So you have these candle body opens over here, the close over here as well. So could we wait for a close below that level before we continue sells down here? We are in this bearish trend, but if you look at the 30-minute, we were respecting the bearish trend over here, and now we've kind of been making these higher highs and higher lows. Could we be coming down into this level to potentially retest this bullish trend to then continue right back up and retest that high, or could we be continuing right back through? I think safer sells will be below this support right over here, and even safer sells will be below 151,700. Let's see what kind of a move we have to the left over here. Once we break that level. All right. So, yeah, once you break that support, now you're starting to get into this consolidation over here. So it's not as clean. It's just kind of a consolidation. This is the cleaner move. From 151, 160 all the way down to 149, 300. That'll be, and that's a lot of pips right there too. But coming back to the level, that's like a current price action. Price is pushing down. Could we be continuing that move from last week? Absolutely. But again, just keep in mind, this is what I said last week as well. We could be consolidating for the week, just like we did last week, right? We were stuck in this range the whole time. Really wasn't worth trading a lot of this, unless you got this move on, I believe this is Friday, where prices kind of tanked over here.
That's
so
Thursday,
this would have been the move. What was that?
Thursday, Thanksgiving. I remember that. Caught that move.
That's right. Yeah, Thursday, Thanksgiving, we kind of tanked over here, and price created our low. So could we be retesting that low? I could see it happening after retesting these candle body highs. Do you have anything else?
No, I think we're good, but same thing. Wait for your confirmations this week. There's a ton of fundamentals coming out.
100%. We could definitely stay between 142, 400, and 150, 700. Right in here until we get some, maybe Wednesday when Bailey starts talking. Yeah. Maybe we get some a nice move during that. So right over to gold, looking at the monthly over here, we've marked off some of our key levels. We have 1680, 1750, which has been holding a nice support for a while now, and then 1830, which we ended up breaking, I believe, last week or the week before, and now we kind of rejected that level, and now we're still right back into this range over here. Looking at the weekly, ended up rejecting this level over here, previous support, and a critical level over here as well. We can actually draw like a little zone right there. I want to extend that to the left. Here we go. So we ended up retesting these previous candle body lows, or this support, previous resistance, support as well, key area, and then came right back into this range where I've been typically staying out of, right? We are consolidating over here. We've been in this corrective phase, and now we're just kind of bouncing off based off data, right? Based off data and fear of what's going on in the market. So looking at the daily over here, the daily is pretty interesting because, again, you have that 1750 area. That price is holding a support, and we are consolidating here. But if you take a look, price is reacting to this level right here, right? We're holding some sort of a support right over here around 1780, and that was also a previous key area as well. Anywhere in here, but price is reacting. This is a key area.
Yeah. So in these zones that Stefano is marking off here, like on the daily 4-hour time frame, yeah, there's like ranges happening, and that's not the most ideal range to be trading in. But if all you do is scalp 10, 15 pips, 20 pips, then you can take those trade opportunities, but understand the restrictions of your trade. If you have a resistance on the daily time frame at 1830 and you're trying to look for a trade around 1827, understand that there's a very high probability price will be reacting off of 1830.
Yep. So, right now with price reacting to this level right down here at 1780, what are the chances that we could get another bounce off of 1830? Right? If you start to get some market structure, kind of like what you have over here, where price is kind of making this high over here, coming right back down to this level to hold support, and then it prints some of these some of these bullish candles to retest these previous highs over here, you could potentially grab a move like you did right over here or right over here. Now we're sitting over here reacting to this support and rejecting multiple times. Look at this daily candle.
Yep.
This daily candle came all the way down into this area and then flipped bullish. So looking at the 4-hour now, okay, so now the 4-hour is ranging. It's a little bit of a mess. So we're sitting right in here, but we keep rejecting this level over here. What happens every time we reject it? We ended up creating this high, kind of consolidating in here, but we've had some bullish pressure since tapping into this area. So what are the chances that we can retest this high up here? It could happen, but right now price is sideways. Price is kind of consolidating in here. There's no clear direction. I think a safe buy is going to be above 1811. With a nice clean move right up to this area over here. But at the same time, we're below both EMAs over here. So could we be holding this as a resistance? We're just kind of tapping off this support, and eventually by tomorrow, the day after, we're going to break this support over here.
Mm-hmm.
It really depends. You just need price to break out of certain levels. I think you may be able to trade in this if price breaks above this level right here.
Yep.
If we get a close above this level, you may be able to get a move right back up to 1812 with a cleaner move to the left. Right over here, just stay patient in here and just wait for price to break out. You don't want to be one of those people on a Sunday getting caught in here, trying to take this buy up, thinking that that's going to happen on a Sunday. Maybe not. And it very well could, but just wait for price to break above and close above that area. And since we're kind of consolidating over here, maybe wait for it to retest and get some clean candles closing in their direction before you take this up. You can stay patient with this because, look, you got almost 170 pips that you could grab right back up to this previous resistance. Mm-hmm. And I fully think that price could be tapping into that area after bouncing off the support multiple times. Again, just wait for price to close above that area. Yep. 30 minutes, a little messy with these wicks, but we are holding a support right over here. It's just price is having some issues trying to break above this resistance over here, along with these two EMAs above the current price action. So that's something just to keep in mind. So I would stay out of here, wait for this move, or wait for price to break this support, because you could take this right back down to some of these levels over here, 1776, 2. I know 1776 on gold has always been or not always, but the past, months, maybe year or two, 1776 has been a critical level as well.
Yep. You want to narrow in your price action as much as you can. So even on that hourly time frame, 30-minute time frame, like if you can, because we just grab liquidity, right? Even on that last 30-minute candle, we grab liquidity, and then we grab liquidity. Yeah, we grab liquidity on the hourly time frame, 4-hour time frame, and that massive bottom wick rejection, and the candle flipped bullish, right? Yep. And so you could have potential moves happening. You just need to see areas or price breaking above this. So you want to narrow in your price action as much as you can. Anywhere above this area, personally, if I saw like a candle closing and then continuation up, with these areas being held as support, I think that's pretty solid. But again, exactly what Stefano said, there's a very high chance price will be reacting off of these levels.
Yeah. No, I fully agree. We could definitely be bouncing off these levels. We just need this close above that level.
Yep, 100%.
Right above here. And once you get that, you might get a nice bullish candle. I don't want to get too carried away over here, but just wait for like a nice rejection to this area. This candle could happen at any time. You wait for the bearish, the bottom wick. This candle flips, and we can continue right back up and mirror these candles over here.
Yep.
And again, that's going to be like 80 pips right there for you.
Yep.
Grabbing this quick move up. So just stay patient. That's all. You just got to stay patient.
Absolutely.
I don't know where I was going with that, but just stay patient.
Absolutely. All right. Any questions? We're pretty much done here with the analysis, right?
Yeah. I think we're all good. You guys got your clear levels that you're waiting to break on both pairs over here. So again, if you have any questions, I'll look in the chat to see what we have. But if not, and I hope that was clear.
There's a ton of fundamentals coming out this week, so just watch out for some of those macro fundamentals, and then also the economic data, and you're pretty much set.
Yep. Like I said, what was it? 79 stats. I have it written down here. 78 stats compared to 49 last week, right? And that just goes to show, especially with DJ, we were ranging all last week until the end of the week, right? Until we got some sentiment coming out. So with that being said, guys, no questions. Thank you so much for your time. Yeah, our pleasure. Guys, I want you guys to all focus on this time from now until the Christmas break. I plan on taking a break around December 23rd. I believe it's a Wednesday or a Thursday. I think it's a Wednesday. Will be the last, kind of like this past week. Wednesday will be that last trading day before the Christmas break until around January 6th, I believe. I already planned this out for myself and for the group. January 10th. January 6th lands on a Thursday, so that 10th will be right back. But guys, a lot of times, you can take this into business, you can take it into trading, but a lot of times people get very lazy, or they fall into that average trap of the holiday season, us being off of trading for 2.5 weeks. Listen, decompose by all means, right? Spend some time with family. Relax a little bit, especially after a hard-working year, a lot of sacrificing. Just make sure that you're spending some time with family and not losing some of those relationships. But at the same time, make sure that you're back testing every single day. Still waking up early in the morning, back testing, looking at the market, keeping your daily routine going. Maybe there's a couple days you could sleep in and relax and spend some time with that. But get right back into your back testing and make sure that you're a completely different trader going into January 10th. Let's say you took off on the 23rd. You're coming in January 10th. You had all that time instead of, actually trading in the live market. You could be learning, looking up economics, fundamentals, all that stuff. So just make sure that you're putting yourself through like some kind of a boot camp, or like I'm going all out until this date, from tomorrow until this date. And let's see where you guys end up by the start of that break.
Absolutely. I'm pretty much doing the same thing, where we're just doing simulation sessions like every single day, and that's what's really going to help you like around
Yeah.
this time of the year, right? To envision your trades, what kind of trades you'll be taking, and exactly what Stefano said. Take that break whenever you need it. Even in we're probably going to end up taking like a 1 week break, personally, but in that 1 week we're still going to be doing those webinars, we're still going to be doing those simulation sessions, we're still going to be doing all that type of stuff besides just live trading. And even in live trading, if you want to trade, because the market never stops moving, right? Even if you take a 1 week break or a 2 week break, it doesn't matter. The market is still going to be moving. But are those the conditions that you want to be trading in is a different question. So even in those live markets, you can still paper trade and try to test out like what are potential setups, how would you manage your risk, and things like that. You should be, as a trader, you should be able to trade in any market condition regardless of what's going on. And so this is the time to kind of start practicing that too. Create a database for yourself. But other than that, manage your risk pretty well. This is the time of the year when majority of the traders blow their accounts. So your goal should be this year to prepare yourself as much as possible so you don't blow an account. And as always, if you guys have any questions, feel free to reach out to Stefano's or myself on Instagram or even here. And I think on Wednesday we're also doing the live trading, right? So we'll see.
Oh yeah, absolutely.
So Wednesday we'll see you guys at 3:30 a.m. PST, which is 6:30 a.m. Eastern time, and